Hey guys, in this video I analyze which gets you a better tax deduction for rideshare driving. If you thought this video was helpful, don't forget to comment, like, share, and subscribe. Of course, tax deductions are super important considering that rideshare drivers don't really make that much money to begin with. So the more you can save on taxes, the better. Let's check out my sheet. So as you can see on the sheet, this is my actual expenses for a standard deduction little worksheet. So I'm going to start with the standard deduction. Right now, the federal deduction is 54.5 cents per mile for 2018. And this changes every year, so you have to check the IRS's website. So what I'm going to do is I base it on, say you drive 300 miles a day, which I think is a pretty good range, times out by 5 times a week, and you get 1,500 miles weekly. And the standard deduction at 54.5 cents for 1,500 miles is $818. And of course, when we do the actual expenses, we don't do it by week, it's by month. So if you times 818 by 4, you get $32.70. So that's your monthly deduction if you were to use the standard deduction rate. Pretty straightforward. So now if we compare that to the actual expenses, I'm going to go off, say you spend $30 a day on gas, so like one $30 fill up a day, 20 days, which is going to be 5 days a week for 4 weeks. So that's basically a whole month. That's $600. Oil change is going to be like once a month, which would be like around $30. Insurance is $58. And so how I came up with that was I just took my actual insurance, which is like $700 a year, divided that by 12 to get 58. And then of course, rideshare insurance basically doubled my insurance, so another 58. Car payment, $200 a month. That I kind of just estimated as kind of an average, car payment that normal people pay. So that's how I came up with that. Car depreciation, $500. That's actually pretty generous, but same type of deal. I kind of just came up with a figure, just using, my own car info. So $500 for that. Car registration, $25 a month, which is based on $300 a year. If you look at the bottom, that is another one where I kind of, usually your car is not going to be that expensive for registration. So I was kind of generous in that aspect. And that's how I came up with the $300. Brake pad, $17 a month, which is, if you look at the bottom, that's basically once a year. So assuming you drive maybe around 60K a year. So $200 divided by 12 is 17. Tires, 21, again at the bottom. If you do it once a year, that's, about every 60K, that'd be like a $250 install. So divide that by 12 and you get 21. 30K tune-up is $33 a month. And that's based on 2 30K tune-ups a year, which is basically about $200 for each one, so $400 total a year. That's how I came up with $33. And then tire rotations is about once a month, and that's like $20. Those are pretty cheap. So if you look at the totals, $32.70 compared to $15.63, so it's way better to do the standard deduction, unless for some reason you have tons and tons of actual expenses that are related to your car. I think the better way to go is a standard deduction. Some other things I wanted to point out: if this is your first year doing rideshare driving, you definitely want to start with the standard deduction. That way you have options. So basically what I mean by that is if you start doing rideshare driving and you do actual expenses for your first year's taxes, you have to keep doing it that way. If you start with the standard deduction, then you can flip back and forth or do whatever you want in the following years. So maybe you do standard deduction the first year, and then, hey, I don't know if that works right for me, so let's try doing actual expenses the second year. Then you can even do a comparison on your real numbers and see which one is better for you. So that's kind of a heads up, just to let you guys know about that. And in addition to all these expenses that are related to your car, there's additional deductions that you can take, like rider amenities, like if you buy water, bottled water for your riders, or your cell phone bill, or parking and tolls, or maybe your not gas buddy app, but a paid app that you use. Health insurance, things like that, you can deduct on either one. So actual or standard deduction. So that's why I didn't put it on there, because that's basically a wash. So just keep those things in mind when you are trying to figure out which tax deduction way is better for you. But, as you can see, I think at least according to my little calculations, the standard deduction is a lot better than your actual expenses. So as you can see, by my calculations, the standard deduction is way more fruitful than doing actual expenses. The standard deduction is quite a bit, probably more than most full-time drivers make in a month. So with that being said, you wouldn't even have to pay any taxes on your revenue earned. That's a pretty good deal if you ask me. For you drivers, which method do you use? Let me know in the comments, Don't forget to like, share, and subscribe, and thanks for watching.